We're talking about crypto, gold, and silver outlook on the technical side with Kevin Wadsworth of Northstar Badcharts. Welcome to the show, Kevin.
Thank you very much for having me, David.
Why Badcharts? Where did that name come from? I'm sure your charts aren't bad, by the way, Kevin. We've talked offline. They're very good charts.
I've got my business partner, Patrick Karim, to thank for that, because I started out as Northstar Charts on Twitter, and he started out as Badcharts on Twitter. We've joined forces, and it comes from Northstar Badcharts, so yeah, I'll blame him.
Well, they certainly aren't bad, like I said. Let's start with Bitcoin. We're going to be talking about the gamut of popular investments today. You're somewhat bullish on all these assets I've mentioned, except for equities, and we'll get to that. What are we looking at right now, Kevin? What does this chart tell us about Bitcoin?
Okay, well, with my technical analysis, I like to identify patterns that are reliable and repeat over time. Of course, Bitcoin and cryptocurrencies generally have got a limited price history, so there's a large caveat against everything that we analyze here with the cryptocurrencies. But Bitcoin's the big daddy, followed, I suppose, closely by Ethereum. But looking at this Bitcoin chart here, quite clear to pick out a repeating sort of cyclical pattern, 1, 2, 3, with these arcs here. And you can make a statement about this chart. Two things, really, that price has never gone above the upper resistance line, and price has never broken and closed a month down below the each of those three arcs. So that gives us some kind of secure footing to sort of base our technical analysis on. And you can see right at the moment that price is coming down and testing that 12-month moving average, horizontal support level, and the edge of the arc. And when you get these sort of confluence of points, three different areas of support, we look to sort of zoom in and see what's going on. So you can see on the zoomed in version of that here, the edge of the large arc, you can see quite clearly. You can see the horizontal support zone, and you can see the smaller arc that's been created. And these arcs aren't just sort of pure coincidence and kind of made up. They're perfectly geometrical. They're drawn here using the TradingView software, and you can see that it's been tested here, 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 and here. And that's not a coincidence any more than price breaking down into a sort of bullish descending wedge pattern. So the technicals are looking on the surface pretty good at the moment, breaking out of a bullish descending wedge. We've got good support, but it's critical that we do start to turn up before we sort of break down, say, below around about the 30,000 level.
$30,000 level. Okay, so that's the critical downside support for you.
It is. If it really closes a week.
We're at 32 today. We're at 32.8 thousand US.
Yeah.
So we're already very much near your downside floor.
Absolutely.
Okay, so what's happening? What's going to happen from here? What's the upside for you? What's the sort of the ceiling, if you have one?
Yeah, sure. I mean, the edge of this arc has guided us all the way up, as have the previous arcs on the pattern. So you just follow it up, and you get not just a price target, but you get a time for that price. And it's in this sort of double shaded orange zone here, which is kind of right at the end of this year and into early next year. And you're looking at figures. I suppose if you're looking for a non-greedy target, you'd be looking somewhere around about 90 to 100,000. That kind of allows you to start descending into the next sort of bearish cycle. But the sort of upside targets, without exceeding that upper line I spoke about, you could be anywhere up towards 300,000 or 400,000. Sounds a heck of a long way up, and right at the moment seems pretty unrealistic and pretty unachievable. So I'm not really going to linger on those kind of price targets just for now, David. I think all we need to see is price break out of this congestion zone, stay above the moving average, and it needs to hold above this horizontal support zone. Otherwise, quite a long way down. The next kind of support level I've got below that, really, that's going to probably hold us is well, unfortunately, around about the 10,000 level or below. There's some horizontal support around 20,000, but it's a pretty critical point here.
Well, let's take a look. Can you go back to the zoomed out chart?
Yeah, sure.
Okay. It seems to me, Kevin, that Bitcoin has never broken down below the bottom of the arc.
That's right. Absolutely. Yeah, it is.
That's interesting. Yeah, so why would this time be any different? I mean, should investors be concerned that we're in arc number 3, according to your chart? Should investors be concerned that now is potentially the first time since all the way back to 2011 you have this chart that Bitcoin is breaking down below the bottom end of this arc?
Yeah, it's always a concern when price sets a new precedent, and when price does something it's never done before, it's sending a pretty strong signal, in my mind anyway. There's a lot of fundamental arguments for and against cryptocurrencies, of course, and I've heard people express views that Bitcoin's okay, so it's the big daddy and it's the market leader, but it's kind of old tech and has a lot going against it, a little bit like Betamax did when in its battle against VHS back in the day. Some people may remember that. So it could be that it's to become obsolete. I'm not a cryptocurrency expert. I'm a technical analyst, so I'm just throwing those ideas out there as a possible scenario. So yeah, if it breaks down from this, then it's sending a pretty strong signal.
I've done this exercise before. If you plot the Bitcoin price since inception, all the way back to 2010, in the log scale, it very closely follows the Fibonacci sequence, which is a naturally occurring numerical sequence. You can find that in many parts of nature, trees, leaves, for example. Why does it do that? Why does Bitcoin do that, do you think?
Yeah, you'll find this repeated in a lot of, well, probably every price chart that you look at, actually. It doesn't matter whether it's the price of Bitcoin, gold, or bananas, quite frankly. This guy back in, I think it was the 11th century, Italian mathematician Fibonacci, it's one of life's great mysteries, I guess. It repeats in, as you say, leaves. It repeats in snowflakes. I'm a meteorologist at heart. That's my day job. So in the world of meteorology, we see Fibonacci repeated over and over again, and it's one of these key scientific numbers that just governs the world around us. Things repeat according to the Fibonacci cycle. So you can apply it to price charts, and you very often find support and resistance levels using those Fibonacci numbers. You can extend upwards and you can extend downwards, and you can find those support levels. So it's another very useful tool. You can do that on the software here, and place those levels on the chart and project what may or may not happen into the future. So I like to use weight of evidence. You'll hear me and Patrick talking about weight of evidence a lot of the time, and we don't just use one technique, because that would be like trying to forecast the weather based on looking out the window and looking at one cloud. You need to look at the entire planet and what's going on across the whole world to be able to forecast the weather regionally and locally with any great degree of accuracy. So it's the same with this kind of thing here. We're taking as many different pieces of evidence, and what you end up with is it's like throwing darts at a dartboard, and they all end up roughly in the same. As long as you're reasonably good at throwing darts at a dartboard, they all end up reasonably close, and you're getting a scattering of targets. Sometimes those targets are very close together. Sometimes they're pretty well scattered, and that's how you get your confidence levels. If everything's pointing in the same direction, in the same general price area, then you can be confident about your forecast. Other times it's not like that.
Yeah. Well, I've noticed Bitcoin follows a sequence more than other things I've looked at. And for the viewers who may not be familiar, the Fibonacci sequence simply states that any nth number in the sequence is denoted by adding the previous two numbers together. So 2 plus 1 equals 3, 3 plus 2, so on and so forth. 3 plus 5, 8, 8 plus 5, 13, 8, and it keeps going on. It theoretically doesn't have a limit. So I shy to compare it to Bitcoin, because if you assume it follows the sequence, then theoretically Bitcoin's price trajectory has no limit. But that's not that can't be right? I mean, let's talk about that. Bitcoin can't go to infinity, or maybe it can.
No, it doesn't, because unless, of course, the unit of currency that you're measuring it in is going to go to infinity. So you got getting into a whole different argument there around what's going on with fiat currencies. I mean, if you're measuring something in a currency that's going to zero, then that's exactly what can happen. But these are the Fibonacci numbers on here. You can see them. You can extend upwards or you can extend downwards from any particular point. And these lines that you see appearing on the chart, they're quite compressed because I'm on a log scale here. I don't really want to start messing around whilst I'm doing this interview, because no doubt it'll mess everything up. But you get the idea that when you put this construction on the chart, you can see these lines, these horizontal lines, and each one of these lines relates to a Fibonacci support level or resistance level. And it's exactly what you just said. It will keep on going up as long as the fundamental factors supporting that upward movement are in place. You get a fundamental shift, and then what happens is the price reverses down, and it uses the Fibonacci sequence on the way down as well. So it's not just when you're going up, it uses the same sequence, the step sequence on the way down, David. So you're using that mathematics on the downside as well as on the upside.
Okay, so potentially volatility on the downside as well if it goes the other way, and it could drop quite dramatically is what you're saying. Well, I'm getting the sense that you're somewhat bullish on Bitcoin. Let's move to another asset. Let's talk about gold. You've got a few nice gold charts. I've actually showed one of your charts to another guest I've spoken to not too long ago, Peter Grantich, and he was showing your, I think you labeled this chart gold launch attempt. And he was saying that the chart shows it could go possibly to $3,000 or $4,000. But I'll let you talk about your charts and your projections. What are we looking at right now?
Yeah, sure. Yeah, so I'm starting with a zoomed out version for gold. I had some fun doing this one quite a while ago. It was before the last US elections, and this goes back to the 1970s and gold's sort of disconnection with with basically the breaking down of the Bretton Woods agreement and the link between the US dollar and gold. So during this period, gold has been allowed to sort of float freely and find its own price level. You can see the election lows are very significant, and I've labeled these. So what I'd like to really draw your eye to is that point number 1 is an 8-year cycle low in gold. Point number 3 is an 8-year cycle low in gold. Point number 5, point number 7, point number 9, point number 11, and the one we haven't reached yet, point number 13. So each of those points, the odd numbers, are 8-year cycle lows in gold. The even numbers, 2, 4, 6, 8, and so on, they're also US election years, but they're not the 8-year cycle low in gold. I'm highlighting the lows here. So a large arc, very large arc that formed as a result of a declining price in gold over decades, in fact, that also formed a bullish, in the world of technical trading, it's a bullish wedge pattern. Bullish because eventually the price breaks to the upside and you start a new bull cycle. A little bit unusually here, the price of gold didn't break down below to test the arc really throughout its basing process, and that is quite unusual, although it hit again at point number 7 and it had multiple hits all the way up the side here. So it's interesting, that something that happened here with this geometric arc, when you project it into the future, that trend line doesn't die and become unimportant anymore. It continues way into the future, right the way up to 2008 there, where the price was still following that arc, perfect geometric arc. Then we broke out, had the 8-year cycle low in 2008, the bull market peak, and we've carved out a new arc and a new kind of handle to this large pattern, if you believe in cup and handle patterns. So that kind of sets the scene for what's going on, and this is a bullish scenario that's taking place at the moment. We've broken out of another bullish downtrending channel. You could view it as a flag as well. Price has broken up. So the pressure is to the upside at the moment, ahead of the 8-year cycle low. The big question in my mind as a technical analyst is, when do we start turning down into point number 13? I've marked it there, but the actual low could be a little bit lower. It could be a little bit higher. It depends on what the price action does over the next few months, the next couple of years. And zooming in a little bit, this is exactly what's happening at the moment. We've got this large, it's smaller than the previous one, of course, but relatively large arc that has carved out since the highs in 2011, 2012. And again, perfect touches, perfect tests on the arc over and over again. So anyone that's a bit skeptical about this kind of stuff and the geometry that takes place in the price charts, you just need to look at some of these and take a step back and think, well, it's happening for a reason. And if it's happening and we can use it to our advantage, why not use it to our advantage? Because at this point here in 2019, we had multiple indicators saying it was the time to get in and to enter, the gold market. I was telling my followers,
those indicators, those circles you've drawn here.
Yeah. So first thing you look for is a bounce off the supporting arc. You're looking for a move up through the 12-month moving average, and you're looking for a move up through this declining trend line. So the declining trend line here since 2011, those three factors, the bounce off the arc, through the 12-month moving average, back above the declining trend line, and just to put the cherry on the cake, we've got a back test as well. So price broke out and it came back tested the arc to absolute perfection in the region of the 12-month moving average, which, if you're writing a book about technical chart analysis, that would just be perfect textbook behavior. And then price just took off, didn't it? I mean, we moved from the 1,250 sort of level, 1,300 level, all the way up to over $2,000, price going up by 70% or more. Of course, we've had the pullback since, and again, it's a textbook pullback, testing the edge of the arc in the region of the 12-month moving average. We do need to get back above the 12-month moving average. We do need to see price moving up to remain bullish here. You can see the stochastic RSI indicator turning up, and we've got some nice higher lows in here as well on the indicators. So I've marked some horizontal levels as well, which give us some increased confidence when we achieve them that we're moving strongly to the upside. And so all the indicators at the moment are looking bullish for gold, but we do have to, I keep saying this to my followers, we have to bear in mind that in 2023, 2024, we've got that 8-year cycle low looming. So any weakness here at any point, if price starts to do something that is a little bit unexpected and against the bull case, then that could be a sign that we're just going to see a protracted downtrend into that 8-year cycle low. It's not what I'm expecting at the moment, but you have to bear that in mind. I would put that at maybe a 25% probability with a 75% likelihood of an upside move before that happens.
I'm just making another observation here. At first glance, it kind of looks like this arc with the shaded region looks like a normal distribution just flipped upside down, right? And so if you consider that if this were a normal distribution, most of the activity would happen within the middle one, -1 to +1 standard deviations. So that's what we're seeing here with gold. Most of that action is happening towards the center of the arc. So could you argue that the edges are the extremities, the highs are kind of tail events? Like it's difficult for gold to hit a high. Could you make that argument?
You could, yeah, and it's also a little bit like saying how far stretched are you from the moving average, because over this time period, the 12-month moving average in this basing period here particularly is it's not angled steeply, it's flattening out. So every time the price tries to move away from that moving average, it's getting pulled back because you're getting stretched from that moving average. And from a technical point of view, a strong sign that you're in trouble or you're likely to experience trouble is when the price gets too far away from that moving average. It's different for different stocks and for different price charts that you're looking at. The price sometimes gets a long way from that moving average, particularly with cryptocurrencies. Don't need me to tell you just how volatile they can be, but with something that's traded heavily, and gold is traded fairly heavily compared to some of the altcoins, for example, then there's a limit as to just how far you can stretch the price above its moving average before it comes back and finds an equilibrium point. So that's kind of how it works. So I'd say this is an accumulation period. It's kind of, you talk about distribution and accumulation, and we have things called Wyckoff patterns, Wyckoff accumulation and distribution patterns, and they form very recognizable patterns. And this is an accumulation base here.
This our friend Peter Greenwich looked at your chart, exactly this chart, and he made the conclusion that gold could climb to $3,000. How did he make that deduction? Can you?
Yeah, so you can. One way of doing that is you can view what's happening now as a sort of a flag formation, and you have a flagpole here, and you have the flag forming at the top here, sometimes called pennants, depending on whether they're expanding or coming towards a point. But regardless, you look at the starting point of the flag around about $1,300, and the top is around about $2,000, just to make the maths easy. So that's a $700 rise there. If we were to break out to around about 1850, 1900, you'd add that 700 on to get your next target. So call it 1900 plus 700, 2600. So I'd be looking at somewhere around about 2600, perhaps with a sort of spike peak to around about $3,000, that kind of level.
Right. All right, let's talk about silver now. We've got a few minutes left. We promised the audience we talk about silver as well. It looks like it's following a similar pattern, is it not?
It is, yeah. This is the zoomed out picture for silver, and
I like this arrow, $100 plus arrow. Yeah, well, yeah.
Well,
okay.
Yeah,
let's just summarize that. Okay, let's just summarize that. Let's just talk about the last arc because we don't have a lot of time left. Why would that trend line continue? Why could it not break downward?
Yeah, so this is zooming in on that last arc. I've kind of taken the arc out and just zoomed in on the current price action, because this is really everything that everybody's looking at the moment. Nice support zone, nice resistance zone, broke down from a bearish rising sort of wedge pattern, expanding wedge. We've now got a couple of resistance lines here to overcome at least. If we get through these resistance lines, the first one's around about 26.85. Next one's up at around 27.80, and you can see there's a horizontal congestion zone around $28. I think a lot of people have quite rightly been looking at $28. So, yeah, we've got to overcome that, and we've got to overcome, of course, the $30 mark. So I'm not getting excited until we actually break up above $30. We've highlighted the level that we need to remain above. If we drop below that level, then the forecast changes and we become much more bearish.
Do your technical analyses tell you or indicate to you probabilities of reaching certain price targets or not?
Yeah, it depends on the techniques and methods that you're using. So we, myself and Patrick, will use a combination of different methods, flagpole techniques, Fibonacci techniques. We'll look at pitchforks. We'll look at a series of resistance and support levels. So it's a case of building an argument and building a case from a starting point of no bias, if you can. It's difficult to not have a bias. You know, there are different ways of eliminating that bias and trying to make sure that you're being objective. But as far as targets are concerned, my first target that I'm really interested in is the previous high around about the $30 mark, and then the second one, which my followers will have, you know, if you're interested in all this kind of stuff, you can look at my charts on Twitter or on the website. You can see that there are a very good series of indications that price is likely to be attracted towards a price target around about $44 to $45 with an overshoot area at the all-time high of $50. So there's a lot of price targets and techniques that lead to a number around about $44 or $45, and that's what I'd like to see before we start to move down into the 8-year cycle low. I'd like to see us break above the $30 level and hit somewhere between sort of $45 and $50. That would fit well with the technical techniques, and that would work well and fit in well with the ahead of the 8-year cycle low. So we have to, you know, it's all very well having that target, but we have to make sure that the evidence supports that. We're not going to break down and have that forecast invalidated. And at the moment, this rising zone here is the invalidation level. Any movement below that and the scenario I've just talked about is pretty much off the table.
Okay, Kevin. Finally, I'd like to address your background. You have a background in meteorology. So I asked a previous question about probabilities because I know nothing about meteorology, of course, but I look at the Weather Network and it always tells you, well, it's got a 60% chance of rain or like a 30% chance of sun. I wonder if similar methodologies are applied to your forecast for the prices of assets.
Yes, of course. And the way you get those probabilities is because the computer models are continually running the future scenarios of the weather. So if you're trying to forecast the weather for a particular town or city, you're looking at there's no 100% in forecasting the future, whether it's the weather or share prices or anything else. It's, you know, you're trying to pick the horse in a horse race that has the best chance. You know, if you're going to bet on a horse race, you want to know which one's got arthritis, which one's got some kind of heart condition, and you want to know which one's a thoroughbred and has been properly trained. And by doing all this technical analysis, what we're doing is we're working out which of the future scenarios is the thoroughbred, which one is the most likely outcome. That's all we can ever do. We can put our money on the most likely outcome, and you have to monitor all of the warning signs that your forecast is going off track. As a meteorologist, I'm always looking at possible signs that our forecast is not going to work out, because you want to catch it early. You don't want to be sort of caught out in the middle of a thunderstorm, you know, getting struck by lightning, which is, you know, the meteorological equivalent of silver collapsing here and going down to $20 or something. So constantly monitoring the forecast, monitoring that it's following the roadmap, and having that roadmap in place is really, really important, because if you don't have a roadmap, you don't know when you're taking the wrong path.
Absolutely. Kevin, it was a pleasure speaking with you today. Excellent technical analysis. We didn't have a chance to talk about what you're bearish on, but we'll get to that next time. I hope to speak to you again soon. We'll talk about things you're not so bullish on. Thank you for coming on today.
Fantastic. Thank you, David.
And thank you for watching Kitco News. I'm David Lin. Stay tuned to watch more news and follow us on Twitter and YouTube.